I often receive comments on my videos dismissing the idea that my strategies are robust for one main reason. That reason is because most of the strategies which I develop from scratch, or strategies that I pick up and I test and I find that are good, tend to be market specific. And in this video I'm going to demonstrate a great example of this, and once you've seen the demonstration and you've heard me out, then I'd like you to make your own mind up whether you agree with me or not. I'm not trying to convince anyone I'm right, because I don't really care. I'm just trying to put across my point of view based on my real life experience. And then I invite any comments on this video where you think I might be going wrong. Before we look at that example, which demonstrates my point really well, let me just explain exactly what I'm talking about. If you don't already know, I primarily trade the Forex markets, and I'm an algorithmic trader. That means I'm a trader with fixed rules to get in and out of trades. So bear that in mind as you watch the presentation, because discretionary trading might be a different kettle of fish, but I don't know because I'm not a discretionary trader. When I develop the rules for an algorithmic trading strategy, meaning I work out what conditions to get in and out of the market, I tend to work on just one of the Forex markets, and then hopefully I'll find something which I'm pretty happy with. And I would have tested that over past data of 10 plus years. Now, if I was to take that exact same strategy and just run it on a different chart of different Forex pairs, let's say I test 8 different Forex pairs across 10 years, I wouldn't expect that strategy to work nearly as well as it did on the original one. In fact, on a lot of those other markets, it would probably work terribly. Now, some people believe that because that strategy only works on that one original market, then it's not robust and it shouldn't be traded. But I believe this is false. From my experience, the Forex markets, and remember, we are talking just about the Forex markets here, they move differently from one another. And that's very obvious to me after almost 8 years of studying and developing algorithmic trading strategies for the Forex markets. Some of the Forex markets tend to trend really well and really smoothly, whereas others tend to be more mean reverting. And that also goes to different time frames within the markets too. But I don't know why this is, and quite frankly, I don't need to know why this is. All I need to do is identify repeatable patterns in their behaviour to make money from them. Enough of me talking, let me show you the example. We're going to look at 2 different charts now, or 2 different markets. We're going to be looking at exactly the same strategy. You see the strategy up here. It's one I've looked at before. It's that 2-bar narrow range pattern with an opening range breakout. And first we're going to look at it on Euro Yen, and then we're going to look at it on Pound Dollar. Notice here we've got exactly the same strategy, exactly the same inputs or settings. So going back to Euro Yen, firstly I'll just show you the date range. We're going from January 2008 through to January 2020. So imagine we've discovered this strategy and we're testing it in January 2020. We want to know what it performs like looking back. So let's have a look at the performance report. That's what the equity curve looks like. If you see, our last trade is end of December 2019. The average trade value is making 17 pips per trade. That's pretty good. And the equity curve, I think you'll agree, is fairly nice. You know, it is going up in the right direction. I'd be quite happy with that. Now let's compare that to the same strategy, but on Pound Dollar. There's the equity curve. It's almost like the inverse. It's completely awful. As expected, we've got a negative average trade. So let me ask you, we've got the same strategy, and that's how it works, drastically different on 2 different Forex pairs. Now, would you trade it on this chart of Pound Dollar, expecting maybe the performance to turn around and it start to make money, or stay well away from it? Well, I would stay well away from it. And what about on Euro Yen? Is that equity curve and average trade value good enough for you to think that this is possibly something that you'd want to trade? So the next thing we'll do is we'll adjust the date range, and I'll show you what happened 3 years into the future since this chart. So we've got data for 2020, 21 and 22. So let's add that and see what happens. And now we've got that extra 3 years of data on the chart. Let's see how the performance of this strategy on Euro Yen changed. That's what the equity curve looks like. So if we look at around about here was where we saw the chart last time. So from this point back to the left is up to 2020, and then sure enough it continued to make money for those next 3 years. In fact, it actually got really good over the last year or so. So if we had wanted to trade this, we would have done pretty well. And what about the results for pound dollar? Did they turn around and make more money? No. Again, let's select end of 2019 is about here, and you can see behavior continued fairly much exactly in line with the rest of the test, just continued to lose money. My point being was this strategy worked very badly over that first set of data which we saw, and it continued to behave pretty badly because that's how pound dollar responds to this type of strategy. And exactly the same goes for euro yen. The behaviour of the market didn't change enough to ruin the strategy. In fact, it actually got better because the equity curve actually shows that it started to make even more money. So that's a really obvious demonstration of how the exact same strategy can work wildly different on different Forex pairs. In general, the yen-based pairs tend to trend really nicely and they respond well to buying breakouts, whereas pound dollar seems to be more mean reverting. You're better off shorting new highs and buying new lows. Next, I'm going to show you one more example. This is a real strategy which I trade in my real account and have made money with. This is the same strategy actually, which I include as one of the 6 strategies in my popular trading course. So if you're looking for strategy ideas, then you might want to check that out. I'll leave the links for the course down in the description. This strategy is designed or developed just for euro dollar, although incidentally I have since found that it does produce quite good results on pound dollar too, but using the exact same strategy on something like dollar yen, for example, would produce terrible results. In this top chart here, we're looking at exactly the same strategy as the bottom one, we just got a different date range. In the top chart, I've got data up until the beginning of June 2020. That's when I first developed the strategy. I didn't start trading it then, but that's when I first developed it. So let's have a look at the performance report. And that's what the equity curve looks like. A very large average trade at $521. That's for trading one full lot. So I was quite happy when I developed that, and I went on to watch it out of sample, and it continued to perform, and then eventually I did start to trade it with my own money. So let's have a look at the next chart, which is showing data just from the 1st of June 2020, when I first developed it, which is what we saw on the other chart, through to as much data as I've got up to date, which is the 6th of January 2023. So let's see how the performance continued to perform after the development date. That's what the equity curve looks like, really nice. It shows making new highs. Average trade value, slightly smaller, but still very high at $424. So again, this is a market-specific strategy, and just because it doesn't work on all the Forex pairs doesn't mean that you're not going to make money with a strategy like this. I included this in my course almost a year ago now, so the start of 2022. So any of you who already got that strategy, then you would have been making money with it just like I did throughout 2022. I'll just show you that on the annual period analysis. So 2020, or the second part of 2020, remember we went from June, made money, good 2021, very good 2022, and we've only got one trade in 2023 at the moment, which was a winner. So there's a couple of solid examples of why just because a strategy only works on one market doesn't mean that you shouldn't trade it and that you can't make money with it. Despite my strategies mainly just working on the one market, I still have confidence to trade them, and that comes from experience of developing and trading these types of strategies over the years and making money with them. I don't think I've ever found the same strategy which works decently enough to trade across more than 3 or 4 of the Forex pairs. And if I was looking for that strategy before I actually traded, then I don't think I'd be a trader. I'd just be a researcher or a tester. Now, this is where I'd like to invite any comments. And better still, please show me those strategies which do work across all the Forex pairs. But remember, we are talking about just the Forex pairs. We're talking about rule-based strategies or algorithmic strategies. We're not talking about discretionary trading either. Well, I hope you've enjoyed that little presentation, and please let me know whether you agree with me or not. But only let me know if it's through real experience with real money in the markets. Next week, I'll be back to testing more strategies for the free Forex strategy database, which we're building together here on YouTube. If you haven't already seen that, each week, or almost each week, I'm taking a different strategy, I'm running tests on it, and then I'm recording the results and putting them in a database. You'll be able to access that database for free to see how strategies perform on each market. I'll leave the link for that database down below actually. So hopefully I'll see you next week for the next strategy. But until then, this is Jared Goodwin, and thank you.